But before then, you're going to look at the currency, whereby we saw the currency marginally firm up on Wednesday to 83.7080 to the dollar from the previous close of 83.8084 on the back of offshore investor interest in government papers and also proceeds from the agricultural exports. On the main NSE 20 share index, it gained half a percentage point to stand at 4,905.68 points, with a lot of support coming in, of course, from the banking sector because of the first quarter results that we have that we're already seeing, and others are following suit, and also from Safaricom, which we're expecting results next week. The all-share index, on the other hand, climbed 0.8% to close the day at 122.90 points. To help us digest these numbers, we have Ian Gachichio, the research analyst at Kestrel Capital, who will help us understand these numbers. Thank you for joining us.
Thanks, Beatrice.
Let's quickly look at some of the numbers that we saw yesterday, and we'll go to the debt market, which is also helping the shilling in terms of inflows. It was the first auction after the 100 basis point cut on the MPC, and we saw yields falling. The 182 fell by about, let me get the numbers for you, fell by about 21 basis points and 35 basis points for the 364. Do you see this continuing?
Yes, I feel this trend will continue. From around the first week of April, we've seen the yields on the T-bills fall from around within the 10% range still, but falling. And this week has echoed that same trend. So as far as the trends go, I think we could see a bit more decline, although demand is still strong on the treasury bills, more so for the 364. Which, with yields at 12%, obviously investors preferring to park their funds there because of the higher yields. So yes, I do expect a slight decline going forward.
Okay. When you're looking at the volumes on the 182, the 6 months paper, was slightly lower compared to the previous sales, but the 364 had some good attraction.
Yes.
Is it that investors are trying to lock in yields before they come down?
Yes, it could be that. Generally, you have a lot of local institutional investors buying into these bills. So, of course, with yields at 12%, that's the best yield they can get. So they obviously try and maximize that because they have a lot of funds which they can keep for a year. And actually, the higher yield is what's attracting the higher subscription rates, well above 200% for the past week. So yeah, it's the higher yields.
All right. Looking at Kenya Commercial Bank, which announced the results after the market closed, the stock market closed yesterday, they had a 25% rise on profit after tax to 3 billion flat. Coming in second after Equity Bank, which had a much more rosier performance. What are your thoughts on the performance of Kenya Commercial Bank?
I think it registered a decent performance. As far as profitability growth goes, we were expecting growth in the range of between 20 and 25%. What stood out was their non-interest income, which grew around 12% to drive the profitability, as well as better cost management. Their cost-to-income ratio actually fell 270 basis points to 57.6%.
Yes.
So that helped their earnings. Another thing that stood out was actually a decline in their net interest income by around their interest income actually fell from a flat growth in their loan book. So that actually stood out.
But quarter on quarter, their loan book was flat.
Yes, of course, elections were going on earlier in the first quarter. So, of course, there was a lot of investor uncertainty. So we saw a flat growth in their loan book. But generally, we were a bit surprised by the fall in total interest income. But the falling deposits actually helped a bit the effects of that. So.
The cost-cutting measures, are they working fast enough? You're still seeing their cost-to-income ratio above 50%, while you're seeing other banks like Equity Bank reporting it at 49.9%. Yeah. Is that an issue?
Well, KCB actually has a target in the medium term to reduce their cost-to-income ratio to 50%. So we should see that materialize across the year. For now, I think, given the improvement from last year, they've only been restructuring this year. So I guess the results of their cost-to-income ratio decline will be more clearer towards. So
it's too early to judge them at this point.
Exactly.
At 43 shillings per share as of close of yesterday, is that a fair price?
It's a bit on the higher side. If you look at the average price to earnings and price to book ratios for the big banks, it's trading at around 10.5 for price to earnings and 2.4, I believe, on price to book. It's compares a bit higher, as I've said, to the sector averages. So, but
with a trailing P of about 8.9%.
Yeah, exactly, and we feel the price. KCB typically it doesn't come off much, so it's a stock that's very stable and historically has been quite stable. So as far as the price, we think it's a bit expensive, but we'll see how investors price in their earnings.
Looking at East African breweries, yesterday it was at an all-time high of 338 shillings, and with a lot of activity, of course, from the foreign investors. What is driving this stock? What are they looking at?
I think if you look at the top market cap counters, foreign investors, of course, apart from the banks, you have EABL left with a market cap above $1 billion. So I think in terms of where they look to park their funds, if you look at it, if they're looking for a manufacturing counter, EABL actually offers the only entry at that level of market cap. So that's partly the reason why foreign investors like the stock. Perhaps they're looking at this growth more long term, because we know EABL has taken a loan from its parent company, Diageo, which should lead to lower dividend payments and perhaps squeezed earnings going forward. So the counter perhaps driven by strong fundamentals as far as market share goes, industry position, growth in Tanzania being looked at as a growth driver, it's going to contribute more to their revenue going forward. So I think those fundamentals are what's driving, or what are driving the stock.
Another company that is also drawing a lot of interest also from both foreigners and local investors is Safaricom. And at the moment now, the demand has actually outstripped supply. Yesterday we saw it close at a new 5-year high of about 7.2.
7.3,
yes, around that level. Is that momentum likely to continue as we go into next week? Full year results?
Yes, I think it will. Foreign demand is very, very, very strong on Safaricom. Supply, like you've said, not matching the demand. We think, of course, they'll record higher earnings. We saw them increase their market share of mobile subscribers to 65%. CCK data showed that for the year ended 2012. And also, we expect their EPS to grow around 28% to 0.41. So, and as well as their earnings to hit 120 billion. So, those kind of projections are driving demand.